Welcome back to the channel. Today's video is why you may lose money in the stock market. And no. It's not one of those BS titles to try to get you to click on the video. I want to share some value with you today to hope that the beginner investor will not lose money, but in fact, make a significant profit. If you're excited to get started, all I ask is that you tap that like button down below. Helps the video, helps the channel, and I certainly would appreciate it. By the way, if you enjoy personal finance and living your ultimate sweet life, that is what my channel is all about, so be sure to subscribe. Let's get started with the video. I find that the beginner investors they get excited about investing, especially with the new investment apps that make it easier to get into the stock market. Things like Webull and Robinhood and things like that. You can access them on the phone. You can easily invest, easily withdraw. Everything's great, but they get nervous. They get panicked and they lose money. That is what I want to avoid today. In today's video, we're going to cover a couple things. Number one, I'll talk a little bit about the investing panic that I'm talking about. Number two, I'm going to share with you some of my own examples of how I lost money in the early days and what you need to avoid. And number three, my recommendation if you want to make the maximum profit from a particular stock or the stock market as a whole right at the end of the video. You ready to get started? Let's get to it. Number one, investing panic. Okay, so what I want to do, I'm going to pull up my iPad screen as I typically do on my videos, guys, and I want to share with you, right here we go, you have the S&P 500 index, right? This is a great way to look at the market, but look at what's going on today, Over here, when the market opened at 9:30 a.m., you can see it was worth $3,634. Drop. Look at this right down here, 10:45 a.m., 35.95. Today's a downturn of the S&P market at the recording of this video. And then I want to share with you something else. Look at Tesla. This is a very hot topic right now, Tesla. If you started the morning here at 9:30, look at that, $600. It dropped all the way down to 555, and right now it's at 572, and it's definitely a red day for Tesla as well. But let me go back to the S&P 500 and show you something. If you start scrolling across here and you look at 5 days, okay, that's looking a little bit better. Let me go over here to Max. Boom. Look at what happened there. So if you're looking at a one-day example of any particular stock or the S&P 500, I see so many people panic and they're like, oh my gosh, I bought in at Tesla this morning at a total of $600 and it's only worth 572. I'm starting to lose money. This is terrible. I need to get out of here. I need to get my money back before I lose it all. They sell and they get less money than they put in the first place. And that's not the point of investing. But if I scroll over here to the maximum, look at that. Tesla is looking amazing. And just because of a small dip, people lose their mind. Hold on to the ride, guys, when the market takes a downturn. In fact, a lot of people treat the stock market as gambling, and you gotta stop doing that, because what happens is you put in money, you see it go down, you freak out, and you sell. Well, that's a great way. You might as well just put it into a slot machine and see if you make any money on a slot machine. What you gotta do, put it away and forget about the investment. And comment below, did you ever sell a stock based on a fear? Let's have a conversation. Get the comment section down below lit on fire with your point of view. Let's hear about it. Now let me share with you one of my examples. I'm going to take you over to the Disney stock portfolio right now. And look at Disney right now. It's trading well, but back in the first downturn of 2008 and 2009, I decided to buy some Disney shares. It was in March of 2008. I bought it for around $30 a share. And then look what happens here. It starts going down to $15.83 in March of 2009. And I gotta be honest with you guys, at that period of time, as a relatively new investor, I started freaking out. I put all this money in. That was a terrible moment. And I thought about selling. Thank God I did not, because look what happens next. It starts to rebound. And then in 2011, it's up to $40 a share, which means it's higher than when I bought in. And now look at it. All the way up, even after the 2020 downturn at $147 a share. I had confidence in Disney. I held on to that stock. If I would have sold when I started freaking out, I would have lost money. But now look where I'm at, significantly higher. So if I kick it back to the S&P 500, I want to share something that will maximize your profit. No matter what type of ETF, stock, or any type of investment you make in the stock market, hold on to it for at least 5 years. And here's the trick. You want to make sure that you're not parting with money that you absolutely need. If you are nervous about the fact that you're putting X amount of dollars into investments in the stock market, and you're worried that, oh my gosh, if this goes down, I'm screwed, you shouldn't be investing in the stock market. First thing I would recommend is get yourself out of debt. It ruins so many lives. Get yourself out of debt. That way, when you do invest money, it's not like you owe on an auto loan or a student loan or something like that the next month. Because if you find yourself in that position, really what you're doing is you're at the casino and you're not actually investing for long-term growth and profit. The next thing is go into this with the expectation that you'll be invested for a minimum of 5 years. The reason I say that is because of the market's ups and downs. That way you're riding through the downturns and the highs and the bulls and the bears and everything in between. That is going to give you the best maximization of profit. Did you know on typical the S&P grows by about 10% every year? So if the S&P averages 10% growth per year, while some years are going to be higher and some years are going to be lower, if you just stick with it for 5 years, you're going to take advantage of that typical 10% growth. So if we go back to the example of the S&P 500, while today looks a little bit red and sad, if you go to the maximum, you're going to see a significant difference. We're worried about a small little dip, but look at the overall trend through the years. What you want to take advantage of is buying down on the dips. So as your favorite stock or as whatever you're investing in starts to take a dip, that's actually the time to get excited and purchase more if you have the means to do so. If you have money you can part with and live without for the next 5 years, take advantage of it because your future self will look back and thank you for making a smart decision. In fact, Warren Buffett even said, be fearful when people are greedy. And people are most greedy when their stock markets are on an extreme high and everybody's like, oh my gosh, look at this, everything's going great. Oh my gosh, you gotta buy, buy, buy. Be a little bit skeptical of those periods. But when things start taking a turn and the economy starts taking a little bit of a dip, he says be greedy when people are fearful. Because that's when you can take advantage of buying things at a discount. So imagine back in March of 2020 taking advantage of some of these stocks when they're at their lowest because people were scared of what was going on in the world. If you had the means to do so, take advantage of it and ride that all the way up to the sky, guys. And you know, Dave Ramsey even says it best, don't get off the roller coaster in the middle of the ride. The people that get off the roller coaster in the middle of the ride are the ones that get the most hurt. And that makes a lot of sense, doesn't it? The stock market's always going to do that. It's going to have its ups, downs, it's going to even have loops in it. But the point of the matter is you got to stay buckled in, stay fired up, and stick with it until the end. If you enjoyed this video, if it helped, my hope is this video helps you maximize your profit. It helps you make a lot of money. I want this video to be that turning point for the beginner investors to say, it's okay, and make you the most amount of money. This could be the $1 million video for you. Take advantage of what I shared with you today and take massive action. If you enjoyed the video, tap that like button down below. Other than that, guys, as always, continue to live your sweet life because you're worth it. Have an awesome day, and we'll see you next time.